at Forge, we often talk about how the line is blurring between the public market and the private market. As both markets feel the effect of a changing macroeconomic environment, investors are rethinking asset allocation decisions and looking for new ideas. But the need to see growth in portfolios isn't going away, and institutional investors are increasingly paying attention to what's happening in the private market as they look to deploy capital in search of long-term growth among innovative companies before they go public. So, to talk more about this, we're joined by Andrew Seata. Andrew is co-head of institutional sales at Forge, and he joins us today. Hey, Andrew, thanks for speaking with us.
Dan, thanks for having me.
So some institutional investors are very familiar with the private market, but others are just getting their feet wet. What are some of the common questions that investors ask you these days, and what are they trying to learn about the private market asset class in general?
Yeah, a lot of institutions that I'm talking with are trying to understand how the private markets have been affected by the public market sell-off. So are we seeing a decrease in the number of primary fundraisers? Are companies holding off raising primary capital because they're worried about raising a down round and the negative sentiment that that would have on the market and with their own employees? They're trying to understand whether companies might be favoring the venture debt side of things because raising equity is not an option. And lastly, they're trying to understand if tenders are happening less and less frequently, because that's always been a pretty big portion of the liquidity market in the private markets.
And Andrew, in the private market, buyers and sellers come together in a price discovery process as they seek to value these private shares. What's the current landscape that you're seeing here, and how does it affect investor behavior?
Over the last 2 years, there's been so much demand in so many companies. Sellers have been able to command premiums to last round valuations, sometimes even for common shares. But the reality is now, buyers have a little bit more negotiating leverage, and so sellers are having to rethink their strategy.
And Andrew, on the subject of buyers, the word institution can mean a lot of different things. Could you break down the current landscape of institutions for us? Who are they? What's their focus? And what are they trying to achieve when they come into the private market?
Firstly, family offices, which have been a staple of the secondary market, continue to be active in the space and aggressively looking for opportunities at attractive prices. We've also seen an increase in the presence of hedge funds and crossover funds, or investors that have public and private exposure, as they continue to dominate the growth equity asset class. And then lastly, sovereign wealth funds have become active as the secondary market as a whole has grown in size to be able to accommodate the sovereign's portfolio strategy.
Thanks, Andrew. Really appreciate you joining us for this month's conversation. For a deeper dive into these topics, we hope that you'll join us on Thursday, May 19th for our next live webinar. Forge CEO Kelly Rodriguez will sit down with Blythe Masters, founding partner of Motive Partners, and then lead a discussion with private market investors Christian Manafo from the Private Shares Fund and Ziad Makawi from Equium. We hope to see you there.